Today we're doing a video on Juan Royalty Trust. This is an oil and gas trust that gives you, it says an 18% dividend monthly on Etrade, but we're going to look into it on Seeking Alpha because it says it's 30% yield on Seeking Alpha. So we're down 7,500 today. The market's down significantly. You see the Dow's down 1.45 at the top, NASDAQ down 1.89, S&P down 1.5. But we're only down 1.25, as you can see here. So even though we're down $7,500, which seems like a lot, we're in line with the market and actually doing better. So that's all you can ask for. And we're already making $97,000 in income, as you know. But we're trying to add to that. We want more monthly dividends, and that's what SJT is, Juan Royalty Trust. It's an oil and gas play that pays you 18% monthly dividends. But here on Seeking Alpha, it says 30%. So let's look into that. They increased their dividend, it says here on February 17th. So this is fresh news, and they increased their dividend from 0.11 cents to 0.24. So 100% increase, over 100% increase in the dividend, they're saying, which sounds awesome. Sounds a little too good to be true, but I mean, okay, that's noteworthy. Let's see what the comments say. People will already start to say that these are going to be fluctuating heavily. Maybe this isn't going to be a permanent stay here at this rate, at this distribution rate. Even if it's a 10% dividend for me, that's all I'm worried about, because 10% times 10 years is 100%. And I just want oil and gas exposure, but through dividends. I don't want oil and gas exposure through regular stocks. It says here, no, they didn't raise the dividend. The very distribution increased by 122. So maybe they're talking about the variable dividend, because some have standard dividends and variable dividends, and look into this yourself, okay? It doesn't really matter to me, okay, whether it's 10% or 20%. Like I just said, I'm just looking to get more oil and gas exposure. That's the same reason why we added to Devon the other day, down 13%. Devon, we only have $1,000 in, and we did a video on Devon again, and I hope that people didn't get misled by the video thinking that I thought it was the right time to buy Devon. Devon here, we have $1,000 in it, down 10%. It's up today in a down day, which is encouraging, but we don't care whether it's up or down. It has an almost 8% dividend, and so we're just playing the dividend game. 10 years, a little over 10 years, that should cash flow. But SJT here, down 21%, 400. I only have $500 in it roughly. I think it's worth adding about $500 too, because if you go into the chart, you'll see that it's had a nice pullback. But the thing is with this kind of dividend, 18% it says here, I don't want to put more money in it because why? It's volatile, and because it's 100% maintenance. I have this one video that I'm not going to link in the description, but you can go see on my wall, secrets to using leverage, and this talks about maintenance. SJT is 100% maintenance, and I don't like 100% maintenance. I'd rather buy things like USA, which I've added to today, which is 30% maintenance. So if I put $1,000 in USA, then they only take up $300. If I put $1,000 in SJT, they take up $1,000. So that's precious when you're playing in margin. See, I have 200,000 in margin, 212 now. It's creeping up because I've been doing some buying today on the weakness. Like I said, I added to USA. I added a little to high bull today, just a small amount. We're talking small amounts. I also increased some exposure to our shorts here since they were down pretty big, and that's a good thing that they were down big, because everything else was up big. If you saw from our prior videos, we were up 30% to start the year. Now we're only up about, I would say, 20-something% now, 23, and the index is only up 6, and the NASDAQ up 12. We're up 23 still, which is pretty good. I mean, well, it's phenomenal. But we're using margin here to do it, and this number here is 600,000. That's going to be taken up if we just put 1,000 in SJT. So this available withdrawal, it has to stay above 0. If it goes to 0, I'm in a margin call. But you see how large the cushion is. So I'm always playing this game of trying to keep the cushion large enough while increasing income as much as possible, which is $97,000 a year, as I showed you earlier. So that's why I'm not trying to buy too much SJT here. A, because again, it's oil and gas and it's extremely volatile, but just like with Devon Energy. But B, again, it's 100% maintenance. Devon Energy is not 100% maintenance, by the way, but I'm still not going to put a lot into that because it's one stock. It could be down huge in one day, which it was. If you put your whole portfolio in that, you could really lose performance and get into a potential margin call. So we tie all of our money, all this big money, into the indexes that pay dividends. We tie them to the S&P and NASDAQ, mostly, and bonds. SJT, let's go ahead and add 500. Before we do that, I just want to show you one more thing. They were established in 1980, so they've been around for a while. I've owned them in the past, and they've done just fine for me. You can see all their cash distributions here. And again, they just increased their dividend. Even if it's a variable dividend, that's a positive. So look into the expiration dates. Some of these trust funds have termination dates. But if they stay above certain quotas and production levels and oil prices stay above certain levels, they can continue to operate. Check into that. But I'm going to put a small amount because $1,000 isn't going to hurt me. I don't recommend putting a lot of money in this fund, but if you want to try to increase your monthly income as much as you can around the edges of the indexes like I'm doing, you go ahead and add small amounts of these. So again, as you can see here, 97,000. So all these added up, they come out to about 8,000 to 9,000 a month. You end up getting more beta in your portfolio when you add oil and gas names like these. And when you have conservative names like we have that are supposed to go down with the indexes like we're doing now, even though we're down $8,000, you definitely don't want to add any more to those tertiary sectors. You certainly don't want to add any more risk to those outside sectors and stocks. You want to stick to the indexes. So as long as we stay in line with the S&P and the NASDAQ, we're okay with today. As long as we're staying comfortably above 0 or 100,000 is where I like to be, then we're doing okay. So anyway, that's what we did. We bought San Juan royalty. Doesn't matter if the price fluctuating, we have a small amount in it, but you add a bunch of these dividend paying names together, then you get another source of income that's a nice addition to your current boring income, which is the indexes and the bonds of the world.